Good morning, everyone. Thank you very much for joining us this morning. I can see people are logging on. We're very excited to have everyone, and we will start the presentation in a couple minutes just to let everyone get logged on and get settled. So stay tuned. Thank you. Can you still hear me okay, Will?
Yes.
Beautiful. All right, well, it's 10 o'clock, a beautiful Tuesday morning, and I'd like to maybe go ahead and begin the presentation. I know people are still logging on, but I'm sure that will continue throughout the presentation, so we might as well go ahead and get started. I'd like to thank everyone for joining us and welcome you. My name is Steve Brandell, and I am the director of the Life Division here at Heffernan Insurance Brokers, and executive benefits and life insurance is what we do here. And we're very fortunate to have with us this morning Will Heidbreder from Principal Financial. And Will has about 19 designations here after his name. He's obviously very qualified, has been servicing and providing help and expertise to financial people like myself in this industry for more than 25 years. And some of his expertise includes executive benefits, business succession planning, retirement planning, legacy and estate planning, and has a legal background and an MBA as well. So he's highly qualified to talk to us this morning. And the reason why I really wanted to bring Will onto a webinar this morning was to talk a little bit about two very important services that Principal Financial provides to us here at Heffernan, and by which we can provide to our clients. And it is very important, and it seems so obvious that, you know, today's topic, why your business value matters. It just seems so obvious, like a lot of things that we run across, but I can't tell you how many business meetings I sit in or referrals I talk to where people understand that they need protection, and they need protection against unexpected death or disabilities or things that happen in everyday life. And one of the first things we'll talk about for example, a buy-sell situation is, okay, yeah, I understand you need the coverage. Let's talk about your business. What's your business worth? And it's like sometimes drawn by stunned silence, like, oh, gosh. Well, I don't know. It's been a while since we've checked it, and either we have no buy-sell agreement, or we have a buy-sell agreement, but it's 10 years old, and I don't even know if it's even accurate anymore. So that's where Principal comes in, and they have a program where they will sit down with a client and either create a buy-sell agreement for them at no charge, or review an existing buy-sell agreement and help make the updates to it, and in the process provide a complete and up-to-date, accurate business valuation, which I can't even emphasize enough the importance of that. So with that being said, I would like to introduce you to Will, and take it away, Will.
Thank you, Steve, and I'd like to thank Heffernan for hosting this event, and thank you everyone for investing your time today. It's really a real pleasure to visit with you. You know, I'm part of the Business and Advanced Solutions team at the Principal Financial Group, and over the last decade, our team has prepared over 15,000 informal valuations of businesses. You know, some days, you know, I think I feel like I might be going blind, kind of looking at all the numbers. But I'm really looking forward to sharing with you some of the insights that we're seeing with the different businesses. And so with that, let's just go ahead and get started. So Steve, you want to go next slide? We've just got kind of a important note here, you know, from the standpoint, you know, even though you know, my background's attorney and CPA, I'm kind of more in-house counsel. So, I'm not allowed I can't get this. None of this should be considered tax or legal advice to you. So you need to visit with your own tax and legal counsel about these matters, but certainly glad to share with you some of the insights that we're seeing with other businesses. And once again, just really appreciate this opportunity. Next. And so to kind of start off with, for many business owners, we find that the business is their largest asset. But in order to get, in order to take advantage of the full value, it really takes planning. And so today we're going to cover 4 different topics. One, kind of knowing what that value is, knowing your value. The second is implementing or updating your succession plan. The third is protecting that value. And the fourth is kind of building a secure retirement. And so we're going to go into these 4 different areas in detail today. So Steve, if we go ahead and go next. So the first one's kind of to know the value of your business. So let's go ahead and start on this topic of knowing the value of your business. So what we did research, and over the last 58% of the business owners have never had their business valued, and those that have, 56% of those had it done in the last 2 years, and 38% was within the last 2 to 10 years. But if you look at the fine print on this study was done back in January of 2019. I don't know about you, but this was, I think a lot's kind of happened, since January 2019. And just kind of knowing what the value of the business is. I mean, it's just kind of been amazing. I mean, if just think about kind of what you're paying your employees now, from now versus then, and just everything that we've kind of been through. And if you think about stock markets and pandemics and everything, that kind of understanding what the value of the business is. A lot of business owners that we visit with, they just really do not have any idea of what the business is. But it's just so key, from the standpoint of the business planning process. So, even those that have had their business valued in the past, just thinking of what we've kind of gone through, just an update and taking a look at what the current value is so important. Not only when you kind of think about from how it fits into a business owner's business plans, but then how that business value relates back into your own personal financial plans as well. Next. And so, when you think about, with the value of a business, how do you value a business? You say, okay, well, over the last decade, you've done, 15,000 valuations of businesses, and at the end of the day, the value of a business is what a willing buyer and a willing seller kind of agree to. But that's kind of what the fair market value is. But there are different ways to kind of assess from that standpoint of kind of taking a look at the value. And so kind of predicting what that value might be. So if we kind of look at the next slide, this is kind of where we can kind of look at different ways of looking at the value. And the first one is kind of an adjusted book value. So if you think about your business, and adjusted book value is kind of if you sold all your assets, paid off all your debts, and kind of walked away, kind of more of a liquidation value, that's kind of your adjusted book value. Now we kind of say adjusted book value because when you kind of think about your balance sheet, when you look on your financial statements, a lot of times you're carrying some of your assets, maybe what you paid for it. So like maybe some of your equipment, you bought some equipment, but now you've been depreciating it down, and maybe you're carrying it at zero now. You've written it off, but if you had to go out and replace it, it costs you an arm and a leg. But if you did really have to sell it, maybe you get kind of fire sale values for it. But kind of adjusted book value is really looking at kind of your assets minus, kind of the fair market value of your assets minus the liabilities is kind of the adjusted book value. So that's one way of looking at the value of the business. Then there's also kind of formula methods of looking at businesses. And so a couple of different ways, I'm going to kind of, one way that is like a multiple discretionary earnings. So, what's cash, kind of looking at, what are the cash flows of the business? And so, for example, it's not always just, sometimes you'll hear, like a value of the business based off of revenues, but really, think about the value of the business where kind of the bottom line profits oftentimes is king. Cash is king. So if you look at, what's the profits that the business is generating, but also thinking about, what are some of those benefits or payments to the business owners that they're receiving. So sometimes, as a business owner, you can get kind of different benefits, or you get the company vehicles, or you might have some different expenses that the business is paying on your behalf. So there might be some adjustments, but basically, if you think of like a multiple discretionary earnings, this might be, for example, it might be if you look at your earnings, let's say, for example, might be 3 to 5 times earnings, might be higher or lower depending upon your industry from that perspective. There's other different kind of formulas that look at, for example, the discounted future cash flow method, which looks at what are the kind of the profits or the cash flows of the business and kind of projects them out into the future. So if you said, okay, this year I'm making $100,000, next year I'm projected to make 110,000, next year I'm going to make 200,000. If you kind of project that in the future and then bring those dollars all back in today and say, what would somebody be willing to pay for those cash flows? And that's kind of the discounted future cash flows, kind of looking at those cash flows into the future and bringing those back into today's dollars, almost like a present value calculation. The capitalization of earnings, and then the last one, which is kind of a comparables market value, which was kind of like selling your home. If you sell your home, if you talk to a realtor, they're going to give you pictures of 3 other homes in your neighborhood and say, these have the same number of bedrooms and bathrooms, and this is what they recently sold for. And so they're going to tell you kind of the comparable. So there's different ways, if it's kind of the book value method, if it's kind of a formula base, which is based off of kind of your cash flows and such, or there could be just kind of comparables in the market of what recent other ones are selling for. So different ways of looking at the value of the business. Yep, thanks, Steve. And so the next page is, so how do you actually get the value of the business? And so you can get it from, so appraisal firms. There's business appraisal firms that will value your business. So they'll take a look at the business, looking at your financials, and there's business brokers and investment bankers that provide valuations of businesses. Many CPAs also offer this service, along with financial professionals will oftentimes offer kind of informal valuations of businesses as well from that standpoint. And so, but one of the questions, as I kind of mentioned, that next that we get is, if we go to the next slide here.
Hold on one second, Will. Do you have an idea of how much a business appraisal firm or a business broker, investment banker charges for a business valuation?
Sure. So on that, yeah, great question. So I don't like to say what somebody else's fees, and it really can depend upon the type of business. I mean, so for example, you might have a simple valuation that might be $5,000 to $10,000 for kind of a simple valuation, but then you get into some of the larger companies. I mean, it could be $20,000 or more for some of the valuations of businesses. So you can get some. So it kind of depends upon the company from that perspective. So
Which probably
yeah,
explains why companies aren't so anxious to go out and have these done every year or two. Even though the actual value of the business is constantly changing, it's not something that people are that anxious to spend money on a regular basis. So that's part of the problem.
absolutely, absolutely. I mean, if you're not looking to sell your business tomorrow, why would you want to spend that type of money from that perspective on getting a valuation from that
Correct.
perspective? And so
But
that's
from our
why.
perspective in doing insurance, we want to make sure our clients are adequately protected. So it's very helpful to know what we're insuring.
Exactly. And so that's where some of the informal valuations kind of come into play. Exactly.
Okay.
Yep. And so, some of the questions, oftentimes you get is, how can I, increase the value of my business? So, how can I make my value higher? I mean, because that's, absolutely. And so, once again, as we kind of talked about, cash being king, um, increasing the cash flow, so those profits. So if you think about, kind of a multiple of, let's say, 5 times earnings or 4 times earnings, if you increase profits by $10,000, and if you can get, 4 or 5 times earnings, maybe you've just increased your value of your business by $40,000 or $50,000 just by increasing your profits of your business. Um, Developing operating systems that improve sustainability. So just kind of keeping that, so it's rather than just kind of saying it's kind of a one-time type of event, something that shows that this is not just a one-time improvement, but really something that's going to continue. Diversifying the customer base. That's something that's you'll see that if everything's just tied to one customer, and if that customer leaves, that could be a big hit to the business. So having multiple customers and diversifying that, diversifying that customer base is important. Having kind of that solid management team and kind of grooming that successor is important, from the standpoint of, too often where you see the businesses where it's just all, the business is so tied to the owner or one person, where if that one person leaves, then, a lot of that business could go away. And so, being able to have that team, where if somebody leaves, that the business can continue. So, having a strong management team is important. But also, you see here on this improve the facilities appearance, it's kind of like, if you walk into, it's like selling your home, you kind of clean up the home and, get everything in order. It's kind of like also, with just having that where, if somebody's going to purchase a business and they walk in and it's kind of a mess, it's like, oh, what else is a mess? So it's kind of first impressions type of scenario on that is more from that standpoint. But I think, if you can kind of, but once again, I think a lot of people can look through that from that perspective.
Yeah. However, you could have two companies with fairly similar revenue streams, but one of them is 80% from one customer and the other is diversified among 50 customers, which makes that a stronger, more viable valuation.
Absolutely.
Okay.
Absolutely. And so one of the ways that we can help is that we do offer complimentary informal valuations. So, not a certified appraisal from the standpoint like with the business appraisers where they charge a fee, but we do offer complimentary informal valuations using 5 different methods. It's a customized report. As I kind of mentioned, we've done over 15,000 the last decade. And it's a kind of free service that we do provide, and it's a great way to kind of start that planning process. And it's one of those, for a lot of owners, as mentioned, they're not looking to sell their business to tomorrow, but at the same time, how do you know if you're on track for retirement or not? If you don't know what the value of the business is, or how do you know, how to protect the value of the business if you don't know what the value is? So It's a great way to help start the planning process, without having those fees that Steve had kind of mentioned earlier for kind of the formal ones. Now, some plans may require, for example, if you're going to do some formal gifting, or if you end up selling some shares to someone, you may require a formal valuation. But this may be the starting point to kind of look at the process, start the process from that perspective. And but it's once again, it's a complementary service that we do provide.
And that's an important point too, is that I wouldn't say this is what you want to do if you are in the process of trying to sell your business. It's like you need a formal appraisal to sell your house. But if you're, from our standpoint, we're trying to help our clients protect their business. So we don't want to tell them to go out and spend $20,000 to find out what their business is worth, but we can help you find out what your business is worth with a couple of these free services from Principal, and now you don't have to spend the money, and we're going to get the proper amount of insurance. So it's more of a method to help our clients properly protect their interests in their businesses.
Absolutely.
Are you ready for the next slide?
Yep, please. Thanks. So here's kind of a sample of kind of the kind of evaluation that we do prepare. So, we use 5 different methods, kind of as you saw kind of earlier, some of the different methods that were kind of highlighted. So we'll look at kind of adjusted book value. We'll look at kind of other 4 methods that kind of look at the business more as a kind of a going concern. And we'll highlight, based off of your industry, what method is the most appropriate. And we'll talk through why we kind of selected the method that we did. And sometimes I get the questions like, well, Will, did you just pick the one that was the highest one? No, it's not always. And so from that, it's more based off of industry, from that perspective. But just in this slide, it just happened to be the highest one from that standpoint. Now, I know business owners would always like to have, oftentimes like to have the one that's the highest one, but it doesn't always happen that way with our results from that perspective. Go on to the next one. So to do this, we do offer this complimentary service, and so for this, in order to provide the service, we kind of have a one-page fact finder where we kind of ask about your industry, kind of what you do, from that perspective. Are you S corporation, LLC, C corporation? Kind of a little bit of background about the company. We do ask for 3 years of financials to be able to prepare the valuation. We don't do it just based off of 1 year alone. And certainly, I think a lot of companies, may want to forget about 2020 from that perspective too. And with some of the valuations, we're either discounting 2020 or even throwing it out the window from that standpoint, especially if they're kind of doing a full turnaround here in 2021. But we do ask for 3 years of financials to prepare the informal valuations. Now, we can't do every type of company from that perspective. So, for example, we don't value farms from the standpoint, because a lot of that's just the value of the land and the crops. We don't do pure real estate companies. We just from the standpoint of we don't know necessarily what street corners the value of certain real estate versus which would the value. So from a real estate standpoint, we don't do the real estate. We don't do publicly traded companies because they already have a value. We don't do nonprofits. But if you and brand new companies, so we do ask for the company to be around for at least 3 years. But if you think about companies that are great fits, I mean it could be service companies, manufacturing, healthcare, IT, distribution, technology, engineering, accounting. We've it could be plumbing. So from that perspective, we've a lot of great companies out there. From that perspective, kind of our minimum revenues is kind of like at least 1 year out of the last 3 of like 500,000 of revenues from that perspective. just for from that standpoint. But this is a kind of a great starting point from that perspective. But and then we kind of turn these around within 2 weeks, and we'll have those numbers and be glad to go over those results. So, with that, once again, we'll go through the results and how we came up with the calculations, and if we need to make any adjustments, we're glad to. I mean, it's a informal evaluation. Glad to get on the discuss review with you and your accountant, your CPA, from that perspective. But key factors. How does that affect me? How does it affect maybe the value of the business versus what does my buy sell agreement say? What would happen if some of my key if I lost a key person? How would that affect the value of my business? Is based on this, who am I looking to take over the business? So do you have a a succession plan? It's kind of one of those things. The earlier you start from that standpoint, oftentimes some more options are available, and just from the taxes perspective on how that the value and how that affects the taxes. And so glad to visit from that perspective. So with that, to be able to start that process on the informal valuations, feel free to reach out to Steve, and he can get the fact finder, and we'd be glad to we can assist with that process on the informal valuation. But how that fits into kind of the succession plans and kind of next is important. And so when you kind of have that value of the business, that also kind of plays a big role into kind of your succession plans, also kind of your buy sell plans. And so if we hit next, and this is where kind of feel that it's important to have kind of the basically kind of, it's called succession plan, but I also kind of think of it as kind of a buy sell plan too, from the standpoint of anytime you have two or more owners of a business, I mean, you absolutely need to have some sort of agreement. I kind of think of an arrangement I had a couple of years ago, where it's two brothers, where they owned it was a dry cleaning business, and two brothers. I mean, they were like, we don't need an agreement. Family takes care of family, and so we don't need an agreement. And unfortunately, one of the brothers passed away, and he left his half of the business to his son. And one brother was kind of looking to expand, the other brother was, and then his nephew was really not interested in working at all, just wanted to collect a paycheck. And so the one brother was looking to buy out his nephew, but the nephew just wanted an outrageous price. But had they had a kind of a buy sell plan where the surviving brother could have bought out his nephew, could have said, okay, if somebody passes away, the surviving brother would have bought out the deceased brother's interest at specified price, and if they had some insurance in place to buy him out, his nephew could have got the cash, which is really what he wanted, and the surviving brother could have got the business and could have just carried it on as he wished. And so, but but they didn't have that type of plan in place. But there's
I can't think of a situation where it's an advantage to not have a plan. I mean, you may not think you need one, and you can't anticipate every possible scenario, but I can't think of a scenario where it's an advantage to not have a plan.
Exactly. I mean, and it's and even seen where not having a plan, or where and even it could be the spouses too. Could if somebody passes away, the surviving spouse could come in and look for a higher price. You may have a handshake agreement on a price that if somebody passes away, we're going to say the value of the business is $1 million. One passes away, nobody else, surviving spouse is really probably the surviving spouse's attorney doesn't know about this, and so may want a higher price or such.
Yeah.
So
happens all the time.
Yeah. So
next,
yep. So from the standpoint, so we see as I mentioned, from the standpoint we offer, the informal valuations. Also from the standpoint of, we'll review buy-sell agreements as well. And, we've looked at over 3,000 buy-sell agreements. Now we haven't looked, there's not the same amount of buy-sell agreements as valuations, just because there's a lot of companies out there that don't have buy-sell agreement, they haven't put in a buy-sell agreement, but they need one. Or there could be some sole owner companies that don't have one. But some of the issues that we've run into with these agreements, not formalized, is about 25% of them that we've reviewed are not signed. What's, if it's not signed, what's that? I mean, how binding is that? See, kind of poorly structured, no funding, with the insurance. So, if somebody passes away or becomes disabled, having insurance available for that buyout is just really key. I mean, so having that liquidity available to be able to buy out a deceased or disabled owner's interest. I mean, if you don't have the insurance, now you're going to have to, for example, let's say you had $1 million buyout. If you don't have that insurance, if you've got to buy out somebody for $1 million, I mean, you might have to earn $1.5 million. Let's say pay taxes at 35%. So you got to earn $1.5 million, pay taxes on a third of that. Now you got your $1 million to buy somebody out. So it costs you $1.5 million to buy somebody out of $1 million versus buying $1 million life insurance policy. And we know the premiums are not going to cost you $1 million. It's so much less. Hopefully, it should be, if they're insurable, from that standpoint. So it's going to be so much less. And the death benefits are tax free. So if structured properly there, and so it'll be just so you're going to get those tax free death benefits. And so for the buyout, so versus if you don't insure, it's going to cost you. You got to figure out, you got to earn the money before you have the money available. So we see a lot of that.
Or even worse, it could end up destroying the business. I mean, you could end up killing the business because you just can't come up with the money, or you have to borrow it, or you have to sell it, or those are the things that we're trying to avoid.
Absolutely. And then outdated, and I'd say outdated would be the price. We see this where the agreements are okay. You set up the buy-sell agreement, but then you haven't looked at the price in 20 years. And so we see a lot of, or just outdated, provisions in there. But so so that's something that, we do offer reviews of agreements. You may have one, but we'd be glad to review and just offer a second set of eyes. There's no charge for that from that perspective either on review of the agreements. And so with this review that we offer, for example, does it cover all the triggering events? Like on that first slide, does it, does it cover, death, disability, retirement? Does it talk about how does an owner retire from the business? Does it talk about, what the valuation is? And, a lot of these we see are kind of get outdated, or, the valuations was like, based off of, 3 times last year's earnings. Well, last year was a rough year for a lot of companies. And so how do you, is that right? Is it a mandatory buyout? And then is disability, is it some Social Security definition of disability, or is it, not able to do your own job type of scenario? So we'll look at the agreements for you and offer up comments from that standpoint. And it's no charge from that standpoint. So, and we kind of talked about, with the insurance, kind of having the right amount of dollars in the right place at the right time, which is just really key for the owners, and protecting the businesses and protecting the families, making sure that liquidity is there to be able to continue the business, but also provide the dollars, that value that you've worked hard to build up in these businesses are available for everyone. Next, on the next slide, so here you're going to see kind of when we look at these, these agreements, some of the main triggering events that we look at: death, disability, and retirement. But if we look at the next slide, I think this is pretty telling, based on some of the stats that we've seen in these agreements. Next one. Next one. Yeah. And the next slide here will show actually that, when we look at these buy-sell agreements, 93% of them talk about, death of an owner. So it'll say, okay, if somebody dies, this is what's going to happen. Is there going to be a mandatory buyout? So 71% of the time, there's a mandatory buyout of if somebody dies. 22%, the company or the other owners have the option to buy out owner's interest. Now, only 61% of the agreements that we review talk about, if somebody becomes disabled. So what happens if somebody becomes disabled? But look at this, only 23% of the time do the agreements talk about what happens if somebody, how do you retire from the business? The agreements, they don't talk about how do you retire. So so somebody comes to us and says, I'm thinking about retiring from my business. The agreements don't talk about how do you retire from your business. About 75% of them are silent. So, is it going to be a lump sum buyout? Is it going to be buyouts over time? Do you get, or you get some sort of consulting agreement? They don't talk about it. So,
and that's where the cash value life insurance plays a role, because a lot of people do have term because it's less expensive on a buy sell, but there's no money for retirement. It's only for death or disability. So we have plans that will offer both.
Exactly.
Next one.
Yes, please. So some other, considerations, as you kind of think about, as kind of protecting the value of the business, as you kind of worked hard to build the value of the business, is making sure we kind of protect it as well. And so on the next slide here, where we kind of think about kind of protecting the value is, that it's between now and when you're looking to exit the business, is making sure that you kind of protect that value, because in case something happens to you or happens to one of your co-owners or key people, think about all the relationships you have, think about all the experience that you have, think about some of the projects that are that you have in the works. If you delay, if a project gets delayed, or if somebody's not there, think about, you've got the revenues coming in, but if they're not there and those revenues don't come in, a lot of times the expenses are still, you still have all the expenses, but you don't have the revenues because of something happens to someone. So to be able to protect the value of the business with, some of the key person insurance is key. So we see where, having key person insurance to protect the business in case something happens to someone, just because of some of the relationships they have and the sales that they bring, the knowledge that they have, and so it's really important from that standpoint. So we see that not only having enough insurance for buying out a deceased or disabled owner's interest, but maybe having a little bit extra to protect the business to weather the loss of those individuals, or even paying off debt too. So there's, you can kind of think about, there's planned events and unplanned events, and I don't know if some of these are planned or unplanned, is but you can kind of plan, but some of these unplanned with death and disability certainly, and certainly we can help with insuring against those, and certainly. As Steve mentioned, that we can look at some different ways to kind of take advantage of protecting the business for both. Now, you can't really buy divorce insurance or bankruptcy insurance. That's the true sense, but we can certainly help you with the death and disability insurance, and look at some ways to protect with retirement. One of the things, so certainly, some of the concerns that we do see. One of the things that I am hearing right now is from business owners that they do get kind of frustrated, especially from an employee standpoint, is that they're talking to these trying to hold on to some of the key people too. Is from the standpoint, you can hit next here, is with some of the concern. Sorry, is that with the employees is, and I'll get to it on next another future slide here. But with the succession strategies is looking, how do I exit the business? And it's really from the standpoint, the sooner you start the process, the more options are going to be available to you. And so kind of my three questions for any business owner who's looking to do some succession planning is first is, to whom do you want to transfer the business? Are you looking to transfer to a family member? Are you looking to transfer to employee, a third party? Is it a co-owner? But who are you looking to transfer the business to? So that's my first question on these succession plans. The second question I have is, what's your timeline? Some owners will say 5 years, some will say 10 years, some will say never, some will say yesterday. So, from the standpoint of, what's your timeline from that standpoint? So to whom are you looking to transfer? What's your timeline is the second question. And the third one is just, how much, of the business are you looking to provide for your retirement? So, I mean, how much do you need from the business to provide for your retirement or your next phase? And so, based off that, we can kind of, look to some of these different techniques, from the standpoint to kind of look to see, what's going to be the best way that's going to work for the owner. You're going to find that, employees never have the money to purchase the business. I mean, I think I've run across it maybe 3 times, but it's typically they don't have the money to purchase the business, and so now you're going to look for ways to kind of, it's oftentimes the cash flows of the business that they're going to use to buy you out, whether it's through bank loans or you being the banker from that perspective. But so it's kind of looking at different ways, but we can help you from that standpoint, look at different techniques to transfer the business. But once again, the sooner you kind of start that process, the more options will be available. And so, we're glad to work through from that standpoint. But also, as from a protection standpoint, is between now and when you are ready to exit the business, we do need to kind of protect you and the business and the key employees from that standpoint to make sure that that succession plan is successful. I thought this was kind of interesting, and we kind of talk about protecting the value and kind of the business values. That when we did all these buy-sell reviews, only 4% of them actually had kind of a current value, a valuation that was current in them. I mean, that's amazing. When we reviewed these, 3,000 agreements, and I think this one had 1,500 because we've done a lot more since then. But
how old does one have to be before when it's no longer considered current?
I think a year from that perspective.
Okay. All right.
Yeah. Yep. So when it kind of gets out of date, where it hasn't been updated, because a lot of times it's maybe you have kind of agreed upon value set in there, and it's so they kind of set it and forget about it, and they didn't update it. So I mean, it's just amazing from that perspective. So but that 96% of them don't have a current valuation in there. So the last part kind of wanted to cover here is just kind of building a secure retirement for you and your employees. We've kind of talked about valuations and buy-sell agreements to protect you, and then also kind of some of the keepers, but also kind of retirement for you and your key employees as well. And so if we hit next here, that we kind of mentioned that for a lot of business owners that the business is oftentimes a major part of their retirement plans. And so depending upon what that sale price of the business is, they may or may not hit their retirement goals. So depending upon if you get that right price, you may be okay in retirement, but there might be a shortfall too. So it kind of depends from that standpoint. So you do need to kind of look to see, okay, from the standpoint, if you get so much, that it's important to also kind of diversify your retirement savings, so it's not all just your whole retirement just isn't tied to the whatever the value of the business is. And so certainly there's Social Security, there's qualified plans, there's non-qualified plans, where you can do some additional savings outside of the business so that you're not tied to just the whole retirement just to that value of the business. So next. And so we can certainly help from the standpoint, we've got kind of this, if we hit the next slide, we've got a kind of a business owner retirement analysis tool, if we go next, which will actually do kind of an analysis where you'll see this blue part where we can actually drop in the value of your business and say, okay, if you sold your business for X dollar amount, let's say over a 10-year period or a 5-year period, and we drop in your other savings and Social Security, how does your retirement picture look? Are you on track for retirement, or do we need to save some more? So, we can do this type of analysis from that standpoint. So just know that that's available as well. Next. But then also from the standpoint, think about your key employees too. So, so we can help from your retirement, but what we find too with business owners is that in talking with them right now is that trying to retain and reward some key employees and tying them to the business's success. And so we talk to business owners and they say, I'm trying to retain some key people, but if I pay them a higher salary, 2 days later they've forgotten about that pay raise and they're looking for their next one. And I gave them this pay raise, and all I've done is just increase my fixed costs going forward. And so they say, well, maybe I give them a bonus at the end of the year, but at the end of the year, after they get their bonus, then they just walk in and join a competitor. So just know that we can also do some different types of plans where you can say, if the employee hits certain goals, if the company hits certain goals, maybe we'll put some dollars aside in a plan for the employees, for the key employees. But you got to stick around not only this year, but the year after, long term to be able to be eligible for this benefit. But once again, it's got to be tied to employee performance, the company performance. So if you're helping the company grow and you're doing your part, these dollars will be available. So kind of trying to be strategic with the compensation dollars. So just know, we've got some plans available from that perspective too, where once again, trying to help grow the value of the business and trying to have the employees kind of aligned strategically with the company. So next slide. And so from that standpoint, just know that we can help from that standpoint. Also from a benefit standpoint to be help be not only competitive from that standpoint, but also from customized plans for your company as well to not only to recruit, retain, and reward these key people. Next. And so there's different ways of and different types of employees that kind of looking at. So if it's kind of retaining some of your top hat, and top hat being kind of maybe those that are making like a 130, 140,000 more, or it's non-top hat, or it's attaining current tax deductions, or if you're looking for some tax deferrals for employees, we've got some different types of plan types that we can certainly help with from that perspective. Next. So I know that we covered quite a bit today, on the informal valuations, on that complimentary service that I want you to reach out to Steve on to be able to get, we can provide a complimentary service. We can also provide that free review of your buy-sell agreement. If you don't have a buy-sell agreement, we've got sample documents that we can share with your attorney from that perspective. We've also, from the standpoint, kind of talked about ways of kind of protecting your business, and also some of these key employee benefits that, really, is something that I think is a hot button right now. Is just some ways to be strategic with the compensation dollars that we'd be glad to visit with you further in detail about, and also about yourself too, with kind of securing your own retirement as well. So we're glad to be a resource from that perspective. So next. So I think,
well, yeah, we can open it up to questions. Actually, Will, I already received one written question. If you have a
Okay.
question, you can either submit in writing or you can raise your hand and I'll unmute you and you can ask Will yourself. But the first question we got was, is the info written in my LLC's operating agreement sufficient for a husband and wife professional service, i.e. private chef business that opened in 1997?
So so we could certainly review that. So a lot of times the operating agreements will include some of the buy-sell language from that standpoint. So that, I mean, that would be a good starting point that we could certainly review from that perspective. So we would be glad to review that. So a lot of times the operating agreements do include the buy-sell language, but I guess without actually seeing it, couldn't really say for certain.
And the question, I guess it's a husband wife, so it
Yeah,
probably doesn't have a valuation, but husbands and
yeah.
wives
So
don't always stay together.
yeah, yeah, and so very true. And so, with some of that language, yes. So from that perspective, and just what happens if something happens to one, and so be glad to review the document and kind of share some thoughts from that perspective, but to make sure that they're protected, and glad to assist.
Great, awesome. Does anybody else have a question? That's the only one I have so far. I don't see any hands up.
But I would say they'd certainly be glad to review from the standpoint of informal valuation if they'd be interested from that standpoint too. Glad to take a look.
Oh, someone just asked how we contact Will. There it is, right there.
Very good.
And I'm going to see if I can. This presentation was recorded. I'm going to get a list of everyone who attended, and I can send it out to everybody, and then my contact information will be there as well. So I don't see any hands up. I don't see any more questions. So with that, I would like to say, Will, we really appreciate your time today. It was very, very informative. A lot of good information. Hopefully we opened some eyes and made some people aware of their situation, and will create an opportunity for us to help and work with you in any way that we can to help you and your business thrive, because that's our goal. And that being said, I think we can wrap it up. Is there any last questions? Will, anything you want to say?
Just really appreciate everybody investing their time today. Thank you very much. Appreciate the opportunity to visit.
All right. Well, we thank you very much for your time, and hope everybody has a great day. Thanks again for joining. Bye-bye.